Okay, so let's begin. We have about 12 odd people. We already 2 minutes past. So uh, I am Hemant, founder and CEO of iNRI. I welcome you all in today's webinar. This is a weekly Q&A. We discuss design exclusively for NRIs and aiming to share knowledge about the platform and in general about India. So this week we'll be discussing about the India budget highlights. So India recently came up with the union budget, and we're just going over the facts and figures in this presentation and kind of discuss any questions as part of it. I want to say that I'm not a tax expert, but we do have a team of CAs where you can look for help. But I'm here with my knowledge and able to share that today. So with that, let's begin. So what is iNRI? If you may not have heard or came across, so this platform. So we are essentially a one-stop financial platform for the 32 million NRIs, OCIs living around the world. We are proud to be, making this exclusive for this community, given that we have, as an NRI myself, I have experienced challenges where there is no dedicated platform for us as a customer, and we are kind of on our own to identify our own solutions with what exists in India. So the idea here or the motivation is to make something really focused on the NRI segment and make an amazing product. So, okay, so coming to today's agenda, we'll be breaking down the budget. We'll be discussing key points, what affects us as a NRI. We'll also be briefly touching on the India investment outlook, why iNRI, and how does it work, and Q&A after that. Okay, so the theme of this budget, as proposed by the finance minister, is employment. You may have heard of this. The essential idea here is that India is growing, and employment is like as the population is young and ready to get started. There has to be a focus on the employment, and essentially that will drive the growth for the coming decades. So overall, it seems like a good focus and trying to include everyone as part of it in in the growth story that India is onto. As you can see, EMP, everything stands for something, and kind of trying to include all of those factors that will be part of India's growth. There are key highlights. I won't go everything, but basically inflation is going as good as expectations, so that's nice. There are higher capital gains taxes on financial assets. There are new slabs announced. There are also higher standard deductions. So I think those are in line with the increasing salaries and the growth in India, and that is kind of expected because a lot of countries which kind of move towards growth and development, evolve into progressive taxation, right? So that's a good thing I see. And how does it impact the NRIs, right? So it's coming straight to the point. So there are lower long-term capital LTCG, capital gains taxes on real estate, particularly from 20% to 12.5%. For long-term capital gains, there is also a higher tax-free limit now from 1 to 1.25. They've also simplified some holding periods. There is no indexation, so that's something which is not so good. Also on equity, they have increased from 10% to 12.5%, and then increased tax rate on short-term capital gains as well from 15% to 20%. There are additional deductions, as I mentioned, for NPS, but may or may not be applicable for NRIs in some cases. So coming to a major equity class or asset class, which is equity and equity mutual funds. So I said there is a higher tax limit, tax-free limit for LTCG from 1 to 1.25. However, this tax rate has increased from 10% to 12.5%. Now you may wonder whether it's a good thing or bad thing because there is a deduction which has come, but also then the tax rate has increased. So we've kind of highlighted here in terms of sorry in two scenarios. One is if you see a low growth in your investments, what could it mean? And if it is high growth, then what would it mean? So, here the scenario kind of matches from if you purchase 10 lakhs of equity in 2010, keep it for until today, and there's a value is 12 lakhs, then there's a profit of 2 lakhs. in going by the deduction of 1.25 with the current rate, you would pay a lower tax essentially. But if you witness a high growth where 10 becomes 15, and then you will see a higher tax implication in case of the new slabs. So it depends on where you are lying, and most likely this will increase the tax. But it is also in place with the gains that are being made in the market, because the higher gains, people expect, or there is a expectation of higher output over time in terms of the market. You will see a higher tax rate. So I think it's a good sign, or the government is expecting that markets will witness high growth, and so kind of taxing that gain from the customers. And this kind of is evident in capital, developed markets as well. So in line with what you would expect as India is growing. Further, also diving deeper here in terms of real estate. So as mentioned earlier, the LTCG rate has been reduced from 20 to 12.5. Now, this sounds really great, why? Because it like almost 7.5% deduction, but there is a catch that the benefit of indexation has been removed. So to quickly give an example of indexation is, let's say, or why does it matter, right? So indexation takes in the factor of inflation. So for example, something that was able to, you could purchase for 1,000 rupees in 2000, right, would be different in 2024, right? It might be higher, right? It could be maybe the same thing that you want to buy could be at 2,500, right? So basically inflation catches up, and then the prices of goods and services increase, right? So indexation captures that, where it says that if you have bought a property in 2000 in 1 lakh rupees, with inflation, the pricing it could be today could be around, let's say, 1.8 lakhs, right? And so the cost of acquisition becomes 1.8 lakhs, and that's why the gain that you will have will also get lowered, and so the tax will implication will be lower, right? So let's compare two scenarios again here to see how this is affecting, the real estate taxation. And here we see one low growth and one high growth. So let's say if you had purchased a 50 lakh apartment in 2010, and today the index price of this value is 99 lakhs, right? And the sale value is 85 lakhs. So in one case you will make a loss, right? But if you consider the new tax regime, it would be a profit, because there is no indexation benefit here, right? So there is a profit of 35 lakhs, and that's why you will have to pay a tax. In case of a high growth scenario, the sale price again, would be higher here, because you have made a high growth. So let's say it's in 2.35 crore and there is a profit here. So the tax paid here would be lower in the current tax regime. So depending on where you are lying, and where your asset or real estate would be, that will be applicable for you as well. Okay. So moving on. So we talked about budget at a quick point, but to also discuss about India, um, India's growth, as we see, is at an inflection point, and that's why there's a lot of these changes which are happening with respect to taxation and economic development. And I feel it's a good sign, where because the budget is kind of trying to include everyone and also aiming towards a developed country. So in the terms that they have kind of proposed, it's Viksit Bharat, right? So it's a developed India that they are aiming towards in the next 10 years. And we are also witnessing that in the markets where, the India has hit recently for the fastest $1 trillion in just 6 months. So, and there is a strong GDP forecast as well by the IMF, which is around 8%. Further to that basis, our knowledge and our conversations, 80% of NRIs that I have personally spoken to want to invest in India, right? So there's a lot of demand that is coming out, and which will be kind of realized in the markets in the coming years. So I would say it's a good time. Maybe you could start today, if not, yet. Okay, so as I said, out of these 80% we have spoken to or wanting to invest, there are a lot of challenges that they face. And these are somewhat the motivations also to kind of build out iNRI, because there is a lack of awareness on investing in India. how does taxation work, right? And that's why, we hold these webinars to kind of answer questions which could be important for you to kind of know in beforehand, as you go into, kind of dealing with this. Um, Average waiting time for, opening an account or working with Indian companies or financial institutions, it takes a long time, right? And we are making this faster by onboarding you in, within weeks to get started. Okay. So yeah, coming to, so we are essentially aiming towards building a super app for NRIs. We have AI-driven robo investing. Also, we have a tax expert marketplace on our platform, and it takes less than 1 week to invest in the best case scenario, right? And it's always 100% online, and we have a dedicated support to help you out, when you need. So this is a snapshot of the platform where you can look into Indian mutual funds particularly. So this is the first asset class that we have started with. You could invest in any of these funds that are available particular to your country. So we automatically filter out the list of funds that are, would be eligible for your residence country. And that is how, we are able to very clearly make this choice easy for you. And, the search cost lower in terms of making this investment process much easier. How does it work, let's say with iNRI, right? So you have your foreign bank account, which could be in your foreign currency. And then you also need an Indian NRI, NRO bank account that holds your money in INR. So you could use your preferred remittance channel to invest, to remit from a foreign currency into INR. And then after that, iNRI comes in, and where you can use this platform to invest into existing mutual funds. So we don't sell our own fund. It's essentially distribution of existing funds that are issued by regulated institutions like Tata Mutual Fund, Quant, HDFC, ICICI, UTI, and the many that you would know, right? So essentially, iNRI is a broker and a distribution platform. We are a certified mutual fund distributor registered with AMFI India, which is regulated by SEBI. So your money is always managed, and either managed in your bank or it's managed by the mutual fund that you invest in. We essentially facilitate this transaction digitally right through the platform. So getting started is easy. There are like 5 steps to it. Getting to know if you are KYC compliant, then creating your investor profile, nominee, and then bank details. We also help with if you don't have a PAN card or OCI, or if in case you don't have an NRE or an out bank account, then you could also use iNRI to open one, all digitally. So we also have built this smart investing tool. So if you don't know where to start, you could use this tool. A lot of our customers actually use this. 40% of our customers have been using this tool directly to invest, and kind of avoid researching too much, or if they don't know where to start or begin with. So about the platform, so far we started 1 year ago. Today we have 10,000 NRIs on our platform and more than 20 crore invested. This chart kind of exemplifies, the growth that we have been seeing, almost like a hockey stick curve. That particularly we have seen this since the start of this year. With iNRI Gold, we offer a zero platform fees for lifetime. So that is something that you can look forward in case you are, looking to invest more. We also have NRI services, as I mentioned, so this is, I think, would be crucial for, NRIs that are particularly finding it complicated in terms of, if they have multiple assets or income in India, and, could use these services to kind of get consultancy, even tax filing. We have multiple tax experts that could help you out in this process. And there are other use cases as well you could use them for, which is repatriation, inheritance, and even real estate transactions that you may have. We had this promotional offer of ITR filing just for $1. So this is particularly for iNRI Gold customers. The idea is to kind of offer more value as you become, part of the platform, and we kind of are designing services which kind of integrate well together for NRIs as a customer. Okay, so coming to Q&A quickly. So we'll also take any questions on the budget if you have. So let me know, but I do have some questions beforehand, which I have seen across, with the platform. So I'll just answer that as well. Um, so, so do I need an NRE, NRO bank account, and can you use the existing one? Yes, you can. Now, if you already have a bank account, then you can use that, but you do need one if you are an NRI, because we offer only the compliant way. I mean, a lot of customers we know that already invest with resident savings account, but that is not we kind of encourage. We rather would say that you invest through the compliant channel and use either of those accounts to invest in. You could use either of it, NRE or NRO. Depends on where the source of funds is. If you're sourcing from your foreign country, then best to use the NRE because it offers more repatriation flexibility compared to NRO. But if you already have money coming in India as an income or any other source, then you could use an NRO account here. You could also use both if you need so. Do I need to complete KYC? Yes, KYC is mandatory as required by SEBI that all investors must be compliant with respect to the KYC process as they invest in any asset class in India. We also help do that digitally on the platform, so you could do your KYC with iNRI. Next question is my money safe, and what if iNRI goes down? So yes, as kind of showed in the investment process, your money is always either with the bank or it's with the mutual fund. So there is not a time where iNRI is holding funds for you. So there is no risk of funds that you have. The risk that you particularly hold is with the Indian market or the AMCs that you are investing in, which has been established or have been doing business for a long time. So essentially, you are putting your trust there more than iNRI here. Is my data safe and private? Yes, we only share data as necessary and store it, on Google Cloud and AWS, and have a very modern infrastructure to kind of, build this platform. So your data is, only shared with, let's say, for example, KYC or investment purposes as required. How does cross-border taxation work? So this is, this will depend on where you are. If you are in US, certain rules may apply, or if you are in Canada or in other countries, there may be local laws that may apply. But this is where you could use iNRI services to kind of help understand on cross-border taxation with our experts that could guide you in the best possible way. Okay, so with that, I'll just quickly go with the chat questions here. But if you have any questions, otherwise you can also speak up. But I'll go this in this priority order first. Okay, so I have a query. What is current taxation on long-term capital on NRE account for mutual fund investing? So if you go by the current tax regime, the long-term taxation would be 12.5% for your NRE account. So I think many people confuse here where they think that NRE money is not taxable. So what it means is that the interest on this NRE balance is not taxable. But if you make a capital gain out of it, that always will be taxable and will be at the same rate as if you invest from NRE or NRO, both are same in terms of capital gains. And with current rate, it would be 12.5% with a deduction of 1.25x. Every month I transfer money to my mother's account in India as a monthly maintenance to her, and she knows what would be the taxation once he transfers the funds to my NRE account. So essentially, this would act like a gift. Once, if your mother kind of gives you this money, and so this would act like a gift to you. I'm not sure whether you can take this money into an NRE account. I think this will come in your NRO account because the money is sourced from India or an Indian resident. So this money would come into NRO, and then if you need to this money back to your foreign country, then you would need to repatriate it and file forms as required to kind of get this from NRO to NRE and then back to your country. But you could just take this money as a gift from your mother. Is NRI eligible for standard deduction of? Yes. So I think so Abhishek Batra, he's our expert CA, is also with us today. So thank you, Abhishek, for joining us. So he could also take some tax questions if you have. Uh, okay, so he also mentioned about tax deduction. So okay, how is your platform different from SBNRI and any pros and cons? So SBNRI is also, I think, a competitor for us. They also offer services for NRIs similar to us. I would say different from SBNRI would be, I am an NRI myself, unlike maybe, their team, where I probably understand better as a customer myself. Uh, Further, we are taking a more modern approach into building this, taking a more product approach or a customer-centric approach. So, those are different things. I would say we are differentiating ourselves. Our services are, like, in terms of customer support, top notch. Even I am available to speak with you if you need so. So you could directly speak to the founder and share your queries. So we have a tax marketplace compared to them, where I think they have an in-house CA. So those are different, I think minute differences. But essentially, I think the approach that we take is a more customer-centric and founder approach compared to them. This chart is for Indian nationals or for NRE account holders. I'm not sure which chart are we talking about. I guess the table. So yeah, so this is table is same. So there is no difference of if you're an NRI or a Indian national, any tax slab difference, it's same. So what's your view on bank FD interest rate trend from now to near future? Are you seeing any market correction? Okay, so I think it's difficult to predict, any market corrections or black swan, because black swan by definition is something that you cannot predict. So I think it would be uh, difficult to say on that line. Anytime it could come, you never know what is lies in the future. In terms of bank FD, I think generally it aligns with inflation, right? The bank FD's rate. So it would stay true to it. But what that also means at the same time, that you are not earning much for your bank balance if you are just putting in FD, right? Because it is just matching the inflation or somewhat maybe giving a bit more, let's say, right? So, or if you are looking to keep that money for a long time, right, best to invest in equity funds or essentially a higher asset class with a higher risk, so that you can make more out of the inflation. Now, real estate hasn't given much, I would say, in the past 10 years. So your best bet it could be your equity, and also as an NRI also, it would be much easier to manage. Do you offer PFIC support for mutual fund calculation? Yes. So we have, CPAs as well on our platform. In fact, Abhishek Batra is a Canadian-based CPA and also a US, CPA. But in addition to that, we do offer PFIC support, so you could use our services for that. We face various challenges with MF investment, in especially when RTN is never allow when they do feel helpless, whereas with CAMs it much smoother. What so yeah, I mean there are issues with RTAs here, and I think, but we do have to work, or in according to the structure that they have. But at iNRI, what we are trying to do is trying to simplify that process for you, so that you kind of have a much more easier onboarding compared to if you were to go it, do it by yourself. So yeah, that's what we can offer. But yes, they are kind of improving. CAMS is definitely better than others. What are charges structure for taxation services? So they are already put up on the platform. You can go to app.com services, and you can see all the listed experts here. So everything is mentioned. You can look at to any expert and see more services as part of their offering. So all of these are mentioned on the platform. If I have only around 50K interest, do I need to file ITR? So I think you should, because imagine this way, if you have a 50K interest, you would have paid a TDS on this interest. Like the bank would have deducted this automatically, right? So you are leaving money on the table where you've given this money to the bank, which could be around 10 or 20% of this, let's say. And that, but you could reclaim this, because if you just have this much income in India, you are below the taxation limit or exemption limit, right? So you are better off filing the ITR and taking this refund rather than giving it away. And you cannot claim this after, after the time passes. You have to claim it within the assessment year. Yeah, so I think Abhishek answered that. Being an NRI, do we need to file our returns, nil returns in Canada? Okay, so I don't think it's easy to save on taxes. Like if you pay, if you invest in any funds, you will have to pay taxes. I don't believe there is any asset class in India that you could do so. There could be a certain exemptions in terms of if you make a gain, then you can put in some asset to save taxes, but there is taxation will apply, right? But I think the better way to think about taxation is to think what returns that you get out of that investment. If you get enough returns, that justifies for the tax that you are paying as part of. Any help in reeling? So we don't help in selling of plots, but we can help with legality around it. Like so, a CA can help you in preparing stuff or in requirements, but we don't help you find the buyer. Okay. Um, can we reclaim old TDS? I believe not. Abhishek can answer if he knows better, but I believe you cannot reclaim old TDS.
No, there is no provision. There are specific provision in specific circumstances. Only you can claim the old TDS. It's not that easy, and it's not worthwhile unless and until the amount is substantial. I would not recommend going for that. The best way is to file the return on time and get the refund. These days, we get the refund within 15-20 days,
Hmm.
so there's no delay. And with the recent change which has happened in the budget, and if indexation, if I'm saying if, because in India there is a lot of skepticism about the fact that indexation should be allowed, because as Hemant has rightly explained, it takes care of the index inflation part. So probably when the final budget becomes an act and the law, we may have an option. This is a theory which is going around in circles, that it will be an option given to the taxpayer whether they want to take tax indexation and pay tax at the rate of 20% or 12.5% flat, like it has been proposed. So if that happens, indexation will be available. And if it doesn't happen, and we go with what the proposed law is, then filing of the tax return is become very important, and that too before the due date, because the only saving you can make from long-term capital gains would be the losses of the previous years, if you have any, to be carried forward. Let's say you made some investments and lost some money, and then it is ideally required to be reported. And once it is reported, then it can be carried forward for next 8 years, and it can be adjusted against future gains. So, and there can be tax planning done around this also. So, it's always advisable to file the returns, and I would highly recommend filing it. It keeps you updated with the department. All the information also is updated, and in any eventuality, if you have to go back to India and return to India, it makes your life simpler.
Yeah, yeah. No, I think that is true, and I think I've come across many conversations where a lot of NRIs want to move to India, and I think this is the best way to kind of keep your a good paper trail. As you just keep that in your residence country, but also in India when you move back. Okay, thank you, Abhishek. Um, okay, so how many customer do you have currently have? So and how is it distributed across the globe? So we have, as I said, around 10,000 users on our platform. More specifically, if I consider Southeast Asia, there are about 25% of them from the Southeast Asia. Any help with selling land properties? I think Abhishek answered. So you can also reach out to Abhishek here. So Abhishek is available on our platform. You could take a consultation with him. Soon as you do so, we'll send you an email with you and Abhishek in CC, and kind of you can set up a consultation with him and require any support that you may want with Abhishek. Okay, so I think again, so in TFSA account, which we don't have to capital and yeah, so as I said, there is no such funds, I believe, which could avoid you to save the tax in India. is SWP. So we don't have SWP yet, but we will have it soon, likely in a couple of months. And that should be available on the platform. What is the observation given PFIC taxation mutual fund growth in India? Is it economically beneficial? So again, this depends on the growth. If the growth is higher, let's say in the particularly if you see in the past 3 to 5 years, Indian markets have done very well, right? So if you expect a similar growth, even 25% CAGR, let's say for the coming decade, right? Even accounting for PFIC, you might be still better off investing in India, right? And if you witness or if you expect at the same time US not to grow that well, then definitely, Indian market would be beneficial to invest in. This can also change in future where PFIC may not apply. So all those things are also could be in favor. But yes, as of today, depends on the growth expectations. But so far, past 3 years have been beneficial, I would say, if you were to invest in India. Uh, is there any need to declare file FCNR deposits from NRE accounts? Abhishek, do you know about FCNR if in India?
Yeah, there is no need to file. If it all depends what is your income. If your income crosses 50 lakh limit, then you are required to report your asset and liability schedule, and
Mm-hmm.
in that you will have to declare this. Ideally, NRE is an account outside India for taxation purposes and for all legal purposes. It is considered as a foreign account, and we are only required to report our Indian earnings and Indian tax assets. So some people report it and some people don't report it. It all depends what all transactions are there. It's ideally, I would suggest reporting it because it's only a compliance matter. You are sharing information and it's not going to harm you. It will only help you in somewhere, but it's not going to harm you. I've never seen any case where there something has gone wrong because we have reported something which is not required to be reported.
Got it. So Sarab had a question. I think he couldn't file taxes for the last 3 years, and and so
Uh,
I
yeah,
think
I have asked him to connect with me personally because I have to understand it's a typical kind of a situation.
yeah,
So he
yeah,
can connect with me and we can take
sure.
it forward. If he has not been able to, as per law, we can file returns only for the last year. We have to file the return before 31st March of the next year. So 31st March 23 return was to be filed by 31st March 24. Now it has gone. Now we can only file if there is a tax due. In case of refund, we cannot file the return. The law was amended somewhere in 2022, and only earlier it was allowed to file, but now you can file only a late return when you are having a tax due situation and payment of additional 25% of the tax. So
Yeah,
it all depends which year it is and how is it and whether it is worth going by that route or not.
yeah. Next question is, do mutual funds bought from iNRI platform will have different NAV with respect to direct options? So yes, we do sell regular funds which are different from direct and they have a higher commission. So NAV is difficult to predict if it would, how much difference would it be, but I would say more around expense ratio. So expense ratio depends on the type of the fund that you're investing. So if you're investing in an index fund, the expense ratio difference will be low. But in case if you're investing in a high expense ratio fund, then the difference would increase. But that's the basic difference between regular and direct. However, I want to add here is you can the benefit of going with a broker is that you have more convenience to work with, and so that's where you could look for. Okay, so I think Abhishek's details, I think you could reach out to him through here. I would say app dot. So I'll just post this link also in the chat in case you are looking for it. Yeah, so you could take his services here. He also offers ITR. Is one of the most active, I would say, CAs and CPAs on our platform and helping NRIs throughout the globe on Indian services particularly. Okay, so you mean AI driven? Does that mean this will suggest auto balance? Will it take in short term versus long term? So right now we have more around smart investing in the first place where it's a more from an entry perspective that we offer you a recommendation. We don't have yet rebalancing that's in the plan and likely to come before 2024 ends. So we will have a a smart algorithm to kind of account for both short term, long term, and kind of suggest you rebalancing techniques that could ultimately improve your portfolio returns. Okay, so I think those are the set of questions I see, and we're also at time. So if there are no more questions, I think we can break out. WhatsApp link. I'm not sure what WhatsApp link. Okay, this one. Okay, so I will share these WhatsApp links. Let me do it. So I want to share that the WhatsApp current group is full. So, but I can share the community link that we have. So I'll share this in the email. So we will send an email post this meeting where we'll send all these links, and you can also find them on the platform. So you can go below and find the link here. I can also copy this and then maybe send it right now in the chat. Okay. Okay, so I think that's all the questions that we had. Great. So, okay, there's one more question. I'll just answer that. For real estate sale in India, as we have 12.5 rate, is there any cess on it? Also, is the national highway bond feature still there? Um, I'm not sure about
Yeah,
the.
yeah, there is a cess on top of it. This is the basic rate of tax.
Hmm,
And national highway bond feature is still there.
okay, great. Okay, so, and thank you to Abhishek today for answering questions and joining us. I think,
No, no, not an issue. I am always there to help out our community.
yeah.
I like you. I have not like you, but I have recently moved. But I had similar kind of situation wherein I had a lot of difficulties. When and what I feel mostly here in this part of the world, especially in America, the in our profession there are many people who are involved, but they are not trained tax experts and accountants. They are
Okay.
operating softwares, and over the period of time they have learned through operating the softwares, whether
Mm,
it's QuickBooks or Intuit or whatever it may be. Because in this part of the world you have courses available for using those softwares and all those, and get certification and get your work. So
mm,
that's something which is, and when especially comes of multiple countries, then it's a big challenge. So
mm, mm,
I'm there for anybody and anyone who looks for any kind of help for Indian taxes. Or I'm
mm,
based out in Canada, so I can work out with Canada, US, and India, all three.
mm, 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 mm. Okay. Okay, I think there are a few more questions, but I would say these are like more specific, maybe to your specific case, like, you are probably looking to have some deduction or, like how taxation applies for India property sale. So I recommend reaching out to Abhishek or any expert on the platform and kind of better understanding on your particular case. Okay. So thank you all for staying. I think good attendance till after 10 minutes into the meeting. So thank you. And you have a good weekend and a good Sunday. Until next time.